What's up, buddy? My name's TradeX. This is my trading den, and today we're going to cover Tuesday, the 4th of April's price action. We've got a lot to cover. We're going to cover some standard deviations. We're going to cover directional bias and draws on liquidity, and we're going to go through my entries. I took over 70 handles on NQ today. So without further ado, let's get the intro rolling, and then we'll get into the good stuff. See you soon. Okay, as always, guys, if you find value in this video, please do consider smashing like and subscribe. It does the channel a world of good, and it also helps other viewers like yourself view this content, right? And I strongly believe in karma, so whatever you put out comes back tenfold. So go on, guys, smash the subscribe button. But let's jump into the good stuff, and we'll crack on. And we'll just start with bias, because I know a lot of you have been jumping in my DMs asking me if I can help you with directional bias. Well, this is going to help you. And what I want to say is time is fractal. I'm going to apply what I'm about to teach you on the daily, but you can use this on all time frames, right? And what I want to show you is this displacement leg here on the daily. And what we know is this. If price is above equilibrium of a premium range, it is more than likely going to go and aggressively reach for the buy side. Now, I have specifically selected this buy side because this was the buy side before the aggressive displacement leg lower, all right? And this was the range I had measured out. And above equilibrium, price was more than likely going to reach up into that buy side to go and purge it, because it had already accumulated and taken sell side. So now its objective was to go and do what? Run into a premium and then go and ultimately seek buy side. Once it got above equilibrium of the premium range, it was more probable that it was going to go and punch up into that buy side. Okay, that's Confluence number one. What else did I have? Secondly, this is where standard deviations comes in, and I want to just briefly touch on standard deviations. So if we go back, this from here to here, this is hindsight plotting standard deviations. But for those who are inside Red Pill, they have known my draw for since Monday has been these standard deviations, and we've bagged all the way up and we've bagged on the way down. And these are the reasons why, okay? When we were here, and this was the Friday last week and going into Monday, this is when I was plotting out where I believe price was going to draw up to. So I was always macro bullish because I still believe we were going to go and target those buy side, but I wanted to provide confluence for that. Additional layers on the pancake for explaining why price is going to reach up to there. It's all well and good saying, oh, well, we got relative equal highs up there. Okay, great, but how are we actually going to get up there, and what are we actually targeting? Now, what I had here is, if we go back a couple of weeks, we had this aggressive displacement leg, and with standard deviations, anything from 15 up, I take the bodies. Anything 15 down, I use the wick to wick. Now, so with this being an hourly, I'm body to body, and I'm extending out. What am I looking for? 3 times standard deviation, 3 times standard deviation, and then we have 3 times standard deviation. Sorry, we don't have that. We have 1 time standard deviation, 3 times standard, 3 times standard deviation. Now, this is the aggressive displacement leg during this week. So this is Monday to Wednesday. This was Thursday and Friday. I've measured this out, extended higher. Then I'm looking in the following week. This is Monday to Tuesday, and this is the retracement into this displacement leg, and I'm measuring this out because this was before the aggressive displacement. And then if we go to Friday and we measure this out, we are therefore looking for confluences. And what do we have across all of them here? 3 times standard deviation, right? This was my draw all week has been 41.70. I've been saying it inside Red Pill since Monday, okay? And then yesterday we had 2 times standard deviation, 2.5 times standard deviation, but today was 41.70. Okay, now if we just jump down onto the 1 minute, this is where we could have taken entries, right? This is where we could have taken entries. We could have taken during any time in the London session, we had reasons to go long, right? We could have gone in equilibrium off that point. We could have got off this 15-minute volume imbalance. There was many reasons to go higher, but I'm not going to cover that today. Today is more about directional bias and the reason why price ran up into that ultimate target. Once price reached that target, we were then looking for signs of reversal. But all of my trades today were on NQ, and so I just want to touch on NQ because NQ had another layer of the pancake which provided confidence that price was going to run higher. And what did we have left open? We had this huge regular trading hours gap left open, right? This huge RTH level, right? We had this huge RTH level had been left open, all right? I got in here when price had fulfilled this RTH gap. People might be thinking, you're ludicrous. You're not expecting retracement once it had pinged the RTH gap? Absolutely not. Why? Because I was waiting for ES to fill its objective, which was 41.70. So I wrote this up in the London session for 24 handles, I think it was. So you can go and check my Twitter if you don't believe me. It's all time-stamped in there. You can see my account details. It's all in there. But that was my trade in the London session. All right. Then we were looking for price to reverse. Why? For the exact same reasons that we just said on ES. ES was the reason why I was therefore looking to go short. Okay, and we did. And we bagged. We bagged very, very well. There was many opportunities to go short here. We could see that we had this displacement leg here. Price got up to equilibrium, but then was failing. What is this indicating? This is indicating mass weakness. If price cannot get back above equilibrium of a displacement leg, that is showing and indicating weakness. Okay, we had a 15-minute volume imbalance running across our chart. Entered here, ran short. Okay, and this ran all the way down into the open. Okay, really ran down into the open. Now, what did this leave us at the open? Ladies and gentlemen, I hear you ask, what did this leave us at the open? If we go on to ES, we had this and we called this out live. I missed the entry by literally 30 seconds. I wouldn't chase it, but this could have been your short. Now, we opened here. So we opened with an RTH gap. All right, I'm just going to clear this for now. We opened with an RTH gap. All right, it filled it, ran higher, dropped through. What is this candle now? Mitigation block. It's a mitigation block. We had a mitigation block inside the RTH gap. This was your short right here. This was your short. And you're running it down to come and target and tag a 15-minute volume balance. 10 handles, bosh. Some people took it inside one red pill. I missed it. But that was your AM session easy trade, right? The MIT block inside the RTH gap in Confluence with a volume imbalance, all right? Bingo. Bingo, bingo, bingo. All right, lovely, lovely jubbly. Now, price then decided to get weird on ES. So I personally went back to my good old friend NQ. So if we just tag this back onto the 1 minute chart, we can see if we take this range here. This is London high to New York low. London high to New York low. Price did what? It returned up into the OT zone and it pinged that 15-minute volume imbalance again and ran short. What happened here? Price rebalanced this displacement leg, ran up into an OT zone before dumping down again. What is this showing? This is showing that price has rebalanced this area, so it has no need to run back up higher. Okay, I was therefore looking at standard deviations for price targets that price is likely to run to. Okay, and all day, if you're inside red pill, you'll know that this has been my target. And guys, I took 40 odd handles today doing exactly this trade. So let me see if I can bring it up quickly. This was my trade, right? 45, I got out at my last contract down at 05, right? Huge trade. But why? Why? Because this was my standard deviation extension, okay? So one time standard deviation. Why? Because this was going to take out the low of the day. And I was waiting for ES to fulfill its objective. But this is where I believe price was running to, because just in lunge, it did not fill it. You can see that this 0.5 standard deviation was tagged, but one time standard deviation did not get tagged. And one standard deviation is a pretty low hanging fruit. And so this has been my draw all day. And what was I waiting for? I was waiting for price to purge the highs on ES, but what did you have on NQ? Guys, you have my 3 drives again. I don't know how many times I have to say the 3 drives. But I'll post a comment card if you've not seen it. My 3 drives has been slapping recently, and I highly suggest you learn it if you're not familiar with it. But on NQ, you have my 3 drives. But what was I waiting for in Confluence? I was waiting for ES to purge the highs. So ES carried out the work of purging the highs for NQ, right? SMT, right? And this is where I went short, 45, right? And I wrote it down. Okay, ultimately fulfilling the objective that I've been targeting all day. The last thing I want to talk to you about, guys, before I call this one a day, I just want to talk about gaps. And gaps are really, really important, right? Gaps are really, really important because a lot of people use them or know about them but don't effectively use them. I personally really, really like them on the daily on SIBIs and BISIs at swing highs and swing lows. Guys, that is for your notes. You should be taking notes on that. I like, and you can see that this SIBI is at the swing high, right? So this is when I use classic support and resistance, right? And so if we drop down onto the 1 minute, these are the gaps that I'm really referencing now. I'm really using and dialing on. I'm not just using every fair value gap. I'm telling you the fair value gaps that I specifically am geared towards. And you can look throughout the day how these were respected, right? Price during this session here, right? During the Asian session, what did price run up to? 25%. What did it expand up into? 50%. Didn't quite get up into 75%. But these are levels, and they are levels for a reason, guys. They are another layer of your pancake and giving you an indication of how price is going to run. Now, if you can start layering in new weekly opening gaps, you're then becoming a completely different trader. And this provided the confidence for my trade as well, because although NQ had hit my 3 drives, NES had purged the highs, but had ran into a new weekly opening gap. Guys, this is the difference between retail Larry and a red pill trader. right? So price ran down and ran lower, but you can see how heavy price has been all day. My overall bias is that I feel we may have seen the high of the year. I genuinely feel we may have just seen the high of the year. But what am I looking at moving into tomorrow? Just to give you guys a little teaser. This SIBI, I'm looking to act as support. And if it crashes through this, I believe we could see blood. Because just below it, this is last month's open price. Last month's open price. Okay, so I'd want to see it hold this SIBI for expansion higher. But if it breaks through this, we could be seeing the start of a recession. All right. But guys, that's going to be absolutely everything for today. I hope you found value in it. As always, do consider smashing that like and subscribe. And if you do decide to walk through the door to Red Pill, I enjoy that opportunity of welcoming you. And until next time, trade safe and trade smart. Take care, guys. Bye.